Hi and welcome to this week's video analysis. My name's Ian Coleman. This is the 4th of March 2019. We're going to break down all the currency pairs, highlighting what formations we're seeing this week, basically what we're expecting to happen. So we're starting off with the euro dollar. One thing we should say is that over the weekend, Trump has tweeted that he believes the only thing that's now holding back the US economy is a high dollar. Now we've seen some gap opens, but those gaps have been closed pretty quickly. The long-term focus, I think, for the dollar is still to the downside, but we could see a bit more of a recovery, should we say, in the dollar before we see those major moves. So we're starting off with euro dollar daily chart. Here we can see we've had some pretty mixed and volatile trading really for about 140 days. Now that has formed an ending wedge pattern as a bias to break to the downside. You can see on Thursday and Friday last week rallies were sold into. That gap open has pretty quickly been closed in euro dollar overnight. If we go to this time frame, and this is the intraday time frame, we believe we're forming a head and shoulders. The support at 113.48, a break there, and the measured move target, at least for an intraday move, is down towards 112.90. Now, as far as Elliott wave's concerned, normally the first wave to the upside is pretty mixed and volatile and overlapping wave patterns. So we're not quite sure whether or not if this is going to be wave 1, wave 2, and then we'll move again to the upside. But the immediate bias, I think, with this head and shoulders formation is for lower levels. Real mixed bag in sterling dollar. You can just see on this time frame here, it hit the weekly Ishimoku cloud, and we've seen a correction to the downside. But if we look to the monthly chart, this again is a wedge formation. It has a bias to break to the upside. And in fact, if we just get rid of these retracement tools, and we put the extension tools on, these previous sort of swing highs line up quite well with the Fibonacci levels. So we posted what they call a perfected 9 on the monthly chart, posted an outside bar, dips have been bought into. If we look to the daily chart, it looks like a head and shoulders formation. So left shoulder, head, right shoulder. But we have retested and come back inside. Now, if we go to the intraday chart, there's a possibility that we've completed this first 5 wave count. To the downside, there is some bespoke support at 131.53. And if we look here, 131.10 is a previous swing high. So there's really the barrier to the downside. Dollar Swiss, again, the medium-term focus is for lower levels. We're in an ending wedge pattern. There is still scope for a move to the upside. Intraday bias, and again, just going to the 4-hour chart, we look like we're breaking a head and shoulders formation to the upside. An A, B, C, D formation would take us higher. The actual measured move for the head and shoulders, so this would be the left shoulder. This would be the left shoulder. This would be the head, right shoulder. Morning doji star as well as at the base is here, which is 10084. Now, the expanding wedge measured move target is here, which is 10089. So it looks like we're just trying to break the neckline as we speak for this head and shoulders formation. So really looking to sort of dip by in dollar Swiss, at least for a corrective move to the upside. Dollar yen is been quite persistent. He had 3 decent days, obviously with gold selling off quite aggressively as well. To the upside, we've got a 78.6% extension level, retracement level at 112.44, and a channel top at 112.53. To the downside, intraday, we've got pretty strong support at 111 the figure. So there's no real indication now that this, even though we've got this 161.8% extension level, we have pretty much cleared that. I don't think there's any clear indication that this upside rally's coming to an end. I think the long-term focus for dollar yen is still to the downside, but there's no real clear indication of stalling in price action yet. Dollar CAD, been talking about this head and shoulders for a while. 133.18 is the neckline. We've got a good Marubozu support from Friday's strong buying around about 132.30. And there's also some bespoke support around there as well. So if we do see a move to the downside in dollar CAD, I think it opens up quite a decent buying opportunity. The measured move target for a breakout of the head and shoulders is around about 135.80. Aussie dollar, I think we're moving lower in an ABCD formation. You could even say this was a head and shoulders, but not at the top of a trend. This is obviously the top of the trend, so I think we're just going to see an ABCD formation down towards the 61.8% pullback level, which is at 69.55. Intraday, let me just get my charts up on the other screen. Intraday to the top side, we've got sort of pretty strong resistance at 71.24, 71.28, and then again at 71.45. Euro sterling. The reason I've put on an ABCD formation here, we had quite a strong selling signal in the monthly chart, but when you actually break down the Elliott wave formation, the last rally to the upside could be seen in 5 waves. So this might be just a corrective move lower in an ABCD formation. Now that target's around about 84, the figure. There's no real clear indication, again, that there's rallies coming to an end. The sell-off is coming to an end. 86.40 is short-term resistance at the moment. Now euro yen, I'll just show the weekly chart here. We broke this expanding wedge formation to the downside. Normally that would mean a measured move target down here, 109.28. This move to the upside has been mixed and pretty volatile. We've got reverse trendline resistance at 127.63. However, the intraday time frames is sort of showing no clear indication that this this rally at the moment is coming to an end. We've got sort of quite decent support to the downside around about 126.30, 126 the figure, but very conscious of that reverse trend line, and I think we've really got to break that for this euro yen, what looks like a corrective rally at the moment, to continue. Okay, I hope you've enjoyed that video analysis, and we'll speak to you again soon. Many thanks.